United States and China have exchanged amongst the first blows in the trade war. Trump administration imposed a 25% levy on $34 billion worth of Chinese goods on Friday. China hit back immediately with duties on U.S. goods like soybeans and automobiles. Neither side shows any signs of backing down, at least now, with Trump already planning tariffs on another $16 billion of Chinese goods. China's Commerce Ministry accused the U.S. of bullying and igniting the latest and the largest trade war in the economic history. Will global trade and financial markets pay the price? Let's discuss the implications of this with Peng. He's investment strategist at Citigroup Global Asia, as well as Geoff, he's senior Asia strategist, capital markets and strategy group at Manulife Asset Management. Good morning, both of you. Thank you so much for taking the time out. Ken, let me start off with you. How are you penciling this in? The equity markets, at least for now, seem to be taking these in their stride. Maybe they were well prepared with all the verbal salvos that were anyways fired before these actions were taken. But these actions will have some reaction at some point of time. Why is it that markets are shrugging them off?
Hi, good morning. Happy to be here. So I agree. I think the market has been pricing in quite a lot of bad news already. Look, over the past 3 weeks, we've had 4.2% depreciation in the CNY, and that's the largest since 1994, right? During the same time, A shares have declined by more than 10%. It's come back a little bit now, but we're trading at about 10.5 times forward earnings. And what that is about as low as where we were in early 2016 when there was a global panic about oil and renminbi, and there were a lot of bad news back then as well. So I think the market has already priced in quite a lot of bad news, and all we've gotten over this weekend was really the $34 billion, right? So now, obviously, there's still a lot of uncertainty, but I think one interesting update this weekend was that basically Mike Pompeo was kind of stopped in North Korea. And I think that shows that it's much more than just a trade negotiation. The bilateral relationship is much bigger and complicated. So I wouldn't assume that now we will get those 200 and 500 billion threats fulfilled. Back to you.
No. Okay, Ken, hang on. I would want some more views from you, but let me also get in Geoff Lewis in this. Geoff, so there are two ways to look at it. One is, as Ken is saying, that maybe, just maybe, we will not see the entire threat being played out. But these salvos being fired, 34 billion, another 16 billion in the offing. Actually, Donald Trump saying that the number could be much higher eventually, even though right now we may safely assume that may not be the number. My question is largely that, is the market pricing in that these are this is more rhetoric being enacted in a small way and will not go out the whole way, and therefore, let's not panic too much about what the U.S. and China are doing?
Well, I think it's a little bit more than that, because markets hate uncertainty, and who knows what the U.S. objectives are with regards to foreign trade policy, China, etc. I mean, it's just not clear. There seemed to be an agreement on the table a few weeks ago, and then the U.S. turned that down and turned up the pressure again. These particular tariffs are quite small. Economists have suggested it might only reduce Chinese growth by 0.2% max. But of course, if you go for another 400 billion, then you can multiply that up, and you're actually talking about reducing China's GDP growth by a full % next year. Nobody thinks that we're actually going to see that. That is basically rhetoric. I think there's a lot of politics here. This is President Trump playing to his electoral base ahead of the midterm elections. Bashing China is a very popular policy back home right now, and the U.S. economy is strong. So I think there's a lot of showmanship here. I don't think it's leading necessarily to an all-out trade war, but you never really know. There's this uncertainty, which surely is going to be damaging investment if it continues for much longer.
Question, Ken. Since the start of the year, amongst the mainland large economy stock markets, Chinese stocks have been vulnerable. Not that the others are not, but Chinese stocks have certainly lost out quite a bit. And while we may not see the full impact of whatever the numbers that people might be factoring in, this is certainly keeping investors at bay in EMs at large, in China in particular. How much further damage do you believe could come in to the Chinese markets in particular, and because of these tensions to the emerging market pack at large as well?
Sure. So even before this past week, we've seen EM currencies already hitting a record low. And over the past week, you actually see Latin America rebounding a bit. So I feel that the negative sentiment on emerging markets, including China, is fairly widespread. In addition to this, we had inside China's equity market, the better performing ones tended to be healthcare. Tech is still doing okay. And so you're basically seeing a lot of domestic demand, longer-term sustainable growth types of stories, consumer whatnot, still holding up fairly well. I think it'll be very important to see what happens with second quarter earnings. We'll see that this month and next. How those companies are providing guidance now that we understand how, that this trade war has started. So I don't think we're completely out of the water just yet. But I also don't want to just assume the worst outcome is going to be the path.
No, which is a fair assessment. Geoff Lewis, India in particular has a case wherein the non-index stocks, the mid caps and the small caps, have corrected significantly. In some people's minds, the valuations of the side markets are as low as they were when the main markets were down about 15-20%. I know it's not the case across the emerging market pack, but a lot of emerging market stocks have looked vulnerable in the last couple of months at least, maybe in part due to the currency pullback, but also in part due to the general sentiment and the outflows that we've seen. How much further damage do you believe to emerging market sentiment, if not actual levels, can we see in the light of the trade war, in light of what's happening between US and North Korea and certain other factors?
Well, I agree with Ken. A lot of the bad news is in the price. I think we have to see a further significant deterioration, determination by President Trump to press on with more tariffs on more Chinese imports to drive the market significantly further from these levels. So I think these are quite good levels. With regard to the long-term case for investing in emerging markets, I think that remains pretty much intact. You've got rising ROE, cheap valuations, and improving growth. And I think that's still there. So once this trade spat is out of the way, I would imagine that emerging market equities would be able to recover quite nicely.
You guys don't seem to be too perturbed with the developments that happened on Friday, Geoff Lewis. You think the markets will take them in their stride as well? The first salvos between the US and China? Geoff?
Sorry, I missed that question.
I'm saying you believe that the reaction that we're seeing this morning in the Asian markets is justified? The markets will not get too perturbed with the first salvos fired between US and China?
Well, these salvos, this was well expected, I think. They are very small relative to trade between the two nations. They're not really going to affect growth. So I don't think this was ever really going to have a big impact. But I think the volatility is going to remain because this trade is going to be an issue all the way up to the midterms and beyond. So it's what the U.S. policy is towards China. If there's a rapprochement and Donald Trump wants to declare victory and bank the concessions which China has already offered and put on the table ahead of the elections, then I think markets could actually rally quite strongly from that point.
Well, the bulls would certainly be hoping for that. Ken, Peng, Geoff Lewis, gentlemen, many thanks for joining us this morning and giving us your thoughts. Really appreciate it.